Yeah, we decided to lump questions for Chris after this panel because I think we're going to touch upon, obviously, some of the things you talked about, but also drill in a bit more to London and the future of its status as the tech capital of Europe. We've had some new people enter in the room, Chris, during this session. So perhaps, I know you covered it earlier in your session, but perhaps for the people who have just entered the room, could you give a few lines just about what UK private capital does and your role in the ecosystem for venture capital?
Sure. So sorry if I'm repeating myself for some of you, but UK Private Capital, so we're the trade body for venture capital, private equity, private credit in the UK. I'm head of venture capital, so I look after the venture capital bit of the membership, and we represent the funds who are members of ours, so the GPs, the venture capital private equity funds, but we also have as members LPs and advisors and others, and it is our job to represent the industry to government, make sure that the industry works in the best way it can, and we have the right tax, legal, regulatory frameworks for setting up and investing funds, but also creating the right environment for them to invest and make the UK the best place, to grow its tech ecosystem, and continue to, as I said, be the third largest in the world, which is pretty impressive.
Cool, thank you, Chris. And just a quick introduction to Carta. If I could just get a sense check of the room, please could you put your hand up if you have heard of team. For those who aren't aware of what Carta does, we're a fintech unicorn, and effectively what Carta does, it is I suppose you could say it's the financial infrastructure of the venture ecosystem. A lot of you may know us as solving the problems for private companies in terms of managing their cap table. We do that for 70,000 companies globally, helping startups manage their investors, manage their equity plans on Carta. But we also actually now serve the GPs and the LPs. We help them run their entire fund operations on Carta, from their fund administration, financial reporting to their CRM. And we are globally with the largest venture fund administrator in the world, acting for 2,500 venture GPs with 9,000 funds on Carta. So Carta also, kind of like UK Private Capital, very much sits at the heart of the venture ecosystem. And Chris had loads of interesting data up there earlier, and some of you may be aware of the data that Carta produces, all taken anonymized, of course, from, the 100,000 funds and companies that use Carta. So if you want to see us, by the way, we have a booth in the main exhibition hall, socks, books, I don't find sock quality is very good nowadays, so please stock up on as much socks as you can. Cool, so let's get into London, Chris. And I know Howard was supposed to join us today, but I consider this quite opportune that you're here because we do bump into each other quite a lot on the road in the UK and around Europe, and both being private organisations, I feel like you could probably have more candid discussion with less of a sort of political bias or agenda here. So if we're going to talk about London, we cannot have this conversation, even though we're 10 years on now, about the impact of Brexit. So I'm really interested because I believe you joined UK Private Capital the day before or the day after Brexit?
I did. So what was that, 6th or 7th of June 2016, and then that sort of fuzzy, weird second morning after the vote where everyone was like, what the hell has just happened? And everyone was thinking, God, am I going to lose my job going to go? Is the world going to, it was a pretty strange second day at work, but, and everything did change. And we basically all got repurposed to do Brexit, as most of the country did. It was a very strange, strange time.
And of course, the effects and impacts of Brexit, some have been short term, some obviously are still being realized. So I'm really curious, you obviously have, your timing in the organization is very fitting. So I'm really interested to know what the story of London has been as a tech capital since Brexit and where you think that trajectory is going forward relating to that narrative.
So yeah, the initial hit was pretty bad. I mean, when I showed our sort of fundraising stats earlier, when we look at it over, 10, 20 years, if you include private equity as well, our members raise 50, 60 billion pounds a year. And then there's 2016, it goes whoop, and it was 3 billion. And I remember Brexit happening and no funds closed. Everything just sort of seized up. It was really, it felt at the time like, okay, is this going to be, terminal for us as an organisation? The way that funds, especially in London, were thinking about how they had to repivot themselves. So if you were a pan-European fund based in London, you did most of your investment in Europe. When we were in Brexit, that was fine. But when we had, when Brexit happened and we had to come into a different regulatory regime, we effectively copied the European one, but came out of the European architecture. You couldn't access investors in the same way as you used to. In Brexit, you could go anywhere and do that. But then with Brexit, we had reverse solicitation. I don't want to go back into all that. It was a very hard, depressing time. But it made the function of how our members and how venture and private equity funds operate really difficult in the short term. And we had to do a lot of work to set up the infrastructure to try and make that work in the best way we can. You had funds that were, they raised from the British Business Bank and the European Investment Fund. But the European Investment Fund always said you have to do 50% in the EU. So some firms had to move to the EU because they were pan-European and more European than UK. So in order to continue having them as an LP, they had to move from the UK. And some of them did make that decision, which was disappointing in the short term. But we did, it took a year or two, but we got the mechanics working again. Obviously, we had the various different versions of the Brexit agreements, as well as half a dozen prime ministers, sort of to get through all of that. And now I think it works pretty well. There's still, in a similar way to, it's a bit annoying when you go to Europe now at the border. There are still costs and annoying things involved, but it does largely work okay. And actually, it has been encouraging, and I think this will be really good for London as well. I'm not sure if any of you saw that Ursula von der Leyen, I think last week, said that the UK is looking to be involved in the EU European Scale-Up Fund. So, we are building bridges back there, and some of that investment which Europe is putting together, especially with the sort of defence type lens and everything else, the UK is now looking to be involved in, or is at least having the conversations. So that might lead to making things a bit easier over time, but relying on government stability in that regard, so maybe not. But in the short term, it looks positive anyway.
Fair. And so we think of sort of London's position in the overall European ecosystem. You had that good chart there earlier showing sort of the amount of money being raised in all the different countries, which obviously still very much cements London's position at the top, in continental Europe. But you and I, we're out on the road. We see each other in various European countries. We see the landscape has certainly changed in terms of the options for finding tech ecosystems across Europe. I think a while ago, obviously it was, UK, France, Berlin, bit of stuff going on in the Nordics. But a load of the European countries now really cottoned on to the fact that technology obviously can be a key initiative, a creator and capturer of value for them. I think, my time at Carta here, I've been here 4 years. Where have I been? I've been to Amsterdam, Denmark, Lithuania, Barcelona. A lot of these are, even kind of the smaller, sort of less known cities, they're really establishing themselves as not only just good breeding grounds for quality tech companies, but also good nurturing grounds. They don't just sort of incorporate there, then flip somewhere else. A lot of them do stay and keep key operations there. So I'm curious, because obviously, although you represent UK private capital, you're out there, you kind of see what's going on in Europe, you speak to your sort of counterparts in those countries. I'm intrigued to know from what you've seen, are there any sort of countries or cities out there that sort of eating at London's share for a specific reason? Like, are they doing something well that London isn't? France is obviously the first one that springs to mind. There's been some cross-pollination there, which feels a bit weird for some people, but I think it's all good. They've copied essentially the enterprise investment scheme we have in the UK. So they've copied some good stuff from us, like you saw on my slides. I suggested, the UK TIBI scheme has been very good in France of, getting institutions to back their own tech ecosystem, and it's something we could copy here in some way. So in terms of, Germany is now catching up. They were probably even further behind, as you saw on that chart, but they, within 6 months have set up a €1 billion fund of fund. They have a future fund, not the same as our one, to back defence companies. So, they're cottoning on. Obviously, a lot of this is driven by, national security concerns, tech sovereignty, ideas like this. So a lot of those big, levers are being pulled as they are at the European level as well. But you're right, when you do go to Europe, you find these little pockets, Tallinn, Stockholm, and places like, where you do have these amazing little sort of, I'd say micro ecosystems, but some of them have raised, some of these companies have raised billions of euros and are doing really well. And a lot of them, and again, there's so much we can learn from what they're doing.
and London is still, and it's great to see, some new VC firms being set up here talking about, the positives of London, but can't rest on our laurels, and we should learn from them. And London has all of its natural, benefits of where it's set up and its history of finance and everything else. Tech's a bit different and it's changing all the time. So we've got to change with it.
You'll see a lot of articles about the key four ingredients for a successful tech ecosystem: talent, availability of capital, infrastructure, culture. Of those kind of four pillars, where do you see that London has durable competitive advantage? And then on the flip side, like out of those four pillars, where does it need to improve significantly?
So it's nice to do a talk where I can talk about how great London is, because I'm usually sort of saying, oh, this investment's going to London, and I'm around the rest of the UK saying, the nations and regions are really important, which they are, but it's great to actually sit down and be able to say, London is fantastic, so fantastically well placed geographically, economically, and everything else. And you might have to remind me of what those four pillars are.
Talent, capital, infrastructure, and culture.
Talent. I don't think there's really an issue there. I mean, there are some issues with visas and other things which the government can make a lot easier. But, organizations like SovAI can now fast track it. I mean, it's messy, but it does work to an extent, and people want to come here, which is great. When we look at some of, 11 labs, these are not UK founders. You have, European founders still wanting to come here and grow their companies, because we do have the capital as well, especially at the sort of seed Series A rounds. Obviously, we have the sort of golden triangle and universities and everything else, which is, other reasons why people want to come here. And London is still sort of centre to all of that. And lots of other countries would, they're a bit jealous of what we have here, and with good reason. And the other two were, which is probably where you need to do some
capital, infrastructure, and culture.
So, I mean, infrastructure. I mean, I guess if you're talking about, the infrastructure of a city, I think, I've lived in London 20 years, it works pretty well. But in terms of, the capital, there are, a couple of hundred VC firms in London, both overseas. You've got a lot of the big, Sequoia's got an office here. You've got a lot of the big US VCs here. So in terms of the capital and infrastructure, and we have great, all the service providers such as yourselves, are all based in London. So in terms of the, I guess what as I was saying in the presentation, I guess what we do lack is that institutional sort of growth capital coming in from the wider city. There's still Silicon Roundabout, I'm not sure it exists as a thing anymore, but in terms of there is still that slight disconnect between these amazing tech companies, and then you go out and meet the big London institutions, and they just sort of look a bit like, it all feels a bit, they don't quite get it yet. So we need to try and, I think, so in terms of the infrastructure, to the capital, I think that's probably where, in London it could just have a better link up, as I said, either it's through a hub like I suggested or some other way, to really sell these amazing scale-ups we have, because they quite often feels like they're operating in isolation. They're operating in these hubs of London where everyone thinks they're amazing and VCs think they're amazing. We need to sell that to the rest of, UK pension funds, wider institutions. And what was the fourth one? Sorry.
Culture.
Oh, yeah. I think it's I guess diversity is the sort of big one there. It's the term we still use. I know it's not popular in the States anymore. But yeah, and VC is improving as an asset class. And the fact, we still don't back enough all-female teams. There's, the Investing in Women Task Force is doing some great work on that. So in terms of that, there's definitely a lot of work to do. But in terms of everything else, I think it's pretty good.
Okay. You mentioned earlier a bit about sort of the friction around hiring, and I think that obviously kind of stems to Brexit. But then again, as you say, there are sort of counter-narratives that say, look, we have non-UK founders who come here and set up fantastic companies. They appreciate the sort of the appeal of building in London. But obviously there's a very big difference between a founder makeup and an employee. There's a certain sort of madness that goes to wanting to be a founder, I would say. But nonetheless, there is sort of expression on the challenges of recruiting people post-Brexit and stuff. So I'm curious, you must speak to obviously loads of VCs, loads of people in this ecosystem. Is that overblown, or do you think that is having an impact on the growth rate of London as a tech ecosystem in terms of international hiring?
Yeah, it is still. I mean, whenever we do survey our members, talent in terms of what they need to sort of plug holes, and is usually, it was Brexit for a couple of years, but then it's usually the number one or number two, above access to capital or anything else. Talent is still the number one issue. I think London is really lucky. They're adding new floors over in King's Cross with, the big AI firms want to set up offices here. There's definitely talent here, which is great. But maybe in less, less sexy industries at the moment, sort of going back to more sort of classic sort of biotech or, other types of industries where, they don't have that kind of hot sort of ecosystem. They do find it a bit more difficult to get, overseas talent to come here. It's more of a, the routes are less obvious than the sort of, tech visas and stuff that we have here. That's where it can, take a long, I worked in the Home Office for a bit, and it is, a department that is very hard to get things through. And when you have that, when you have a company with 9 months runway and you're trying to bring in, a new salesperson or something to really get that company moving, and you have to wait 9 months to then get the person in, that can be very frustrating. And you have to then look at alternatives. So I think, again, there's that sort of twin track between, we have all this amazing talent coming in, but then if you're not in one of those really clear sectors, and it's a bit unclear whether they fit into one of these fast stream programs, then it can be a real problem.
Okay, so we talked about building and the common trajectory for a lot of tech companies here, at least the ones who kind of go all the way, build in London, scale in London, and eventually sell to the US. For years and years now, and it's sort of rather sort of depressing, quite frankly, to read on X, but there's the common attacks, particularly from the US VCs and even some of our own sort of UK and European-based VCs of London as a credible listing destination for tech companies. I know we've got talks later on from the LSE, but it's an important one to bring up. So I'm really curious, Chris, what's your take? Is this overblown? What's your view on the LSE as sort of an exit path?
Yeah, I mean, and I love Neil, who's speaking later in the LSE, and I think he's doing some great stuff. But there was one quarter last year when I think less capital, we dropped from like 12th to 37th in the amount of money being raised in one quarter. We were like one place behind Mexico, and you're right, you then had lots of, usually you're right, US VCs going on LinkedIn going, UK's, is so far behind the US, why would you ever list in the UK? And I don't think that is the case. We surveyed our members last year, and, I think it was something like a fifth said they were looking at listing a company in the UK. But most of the comments said the UK is great to list. They're a fintech type business for £1 billion. You can do £1 billion listing very comfortably in the UK, and several have done in the last year, and things are picking up a bit, which is good. But obviously, £1 billion exit for a VC fund these days probably doesn't quite cut it, especially for the larger ones. And if you want to have you look at some of the listings that have gone in the US, SpaceX, for example, if that lists at anywhere near the 1 trillion plus, whatever they say it will be bigger than all, European listed markets put together. It's like, so there is this, I think the UK has made some strides, but if you just compare it to what's going on in the US, we're still miles behind. And, there has been talk again of having, a single, European bourse where, sort of to bring all the capital, and I still don't think that will ever happen. Obviously, we're outside the EU anyway. But in terms of London, we really, even all that sort of, noise, what's going on in the US withstanding, the London should, we have so much of the expertise here, should still be a real centre for listing, and there's certainly a lot more we can do there. The stamp duty share holiday, which I mentioned earlier, so any new company listing can have a 3-year holiday on, the stamp duty transaction is a real drag, I think, is a good start. But again, and pensions again, that's the other side to this, as it always is. I think their exposure to UK listed markets was something like 25%. 20 years ago, it's now 4%. So again, we're not backing ourselves, and that's playing through into the public markets as it is in the private markets.
I mean, my sort of background is in funds before joining Carta, so I'm more of a private and public markets expert. But I was just wondering if this whole thing with different stock exchanges is the problem not actually the exchange, it's more sort of the culture and the environmental factors that surround it. So the fact there's less liquidity on LSE, you have less analyst coverage, and I suppose also, if you're a tech company, you want to be kind of compared to your peers on a certain exchange. So I don't know whether it almost feels like for the LSE, it's almost kind of got a problem like a lot of tech companies do, that kind of cold start problem, where they effectively need those first, or kind of like, a significant group of people to show the success, and that ultimately attracts more. Because right now it's just basically kind of seems like NASDAQ or nothing for a lot of people. This isn't to criticize the LSE, I'm just sort of sort of trying to sort of analyze, digest of like what the kind of narratives you're hearing out there in the ecosystem.
Yeah, and I think to be fair to the LSE, so it's not always, tech isn't the world. It is for us, and that's why you get lots of, VCs bitching about it online. But there is, there are many opportunities for listings, and I know they've had several flagship attempts, and they're trying to get, whatever goes on with Revolut and things like that, or you have sort of dual listings might happen a bit more, but we need to get a bite of that cherry a bit more, and so they need to be a bit more creative, I think, and there are various ideas. Maybe you change the AIM market, which again, has been having a bit of a rough time. I think there are lots of ideas about how to do it, but you're right. I think it does need that more sort of institutional approach.
Gotcha. We're coming to the end before we get to questions. You covered a bit of it earlier, but there might be some new people in the room, and maybe you'll give a slightly different answer or a bit more nuanced. But you obviously have the unique position of having sort of the attention of all the stakeholders in the ecosystem, government, VCs, founders, the generic tech ecosystem. The thing that's outside of your control that would really move the needle for London, what is it?
I think public markets and exits is the real thing that I think we need more as an ecosystem. So I said, and it's not just obviously the listings environment. We need more strategic. We need money. When I was showing that fundraising ecosystem, we need more of that money coming back in. So I think for London, it just needs more of that. More secondaries, more. So just purely with my VC hat on. That's something which I think we need more capital being recycled in the ecosystem, and then apart from that, it's just selling what we have a bit more and being more comfortable with that. I think is probably the main one, and it's good. We've already heard the conversations earlier. People are very comfortable doing that, and we need to translate that more into a sort of national stage and not be embarrassed, about how great London is. London is great. The rest of the UK is lovely as well, but London is fantastic, and we should celebrate it.
Cool, fantastic. To the organisers, I don't know how much time we have left for questions. 5 minutes? 10 minutes? Okay, well, Chris, thank you very much for those insights. A round of applause for Chris, please. And now we can open the floor to some questions. Yes, the gentleman, I can see a black sleeve. I can't see a head. Oh, there we go.
I've got a floating mic coming around, so bear with me. If we can keep our questions succinct as well, just for time. Thank you.
Hello, I'm Carl. You mentioned there was kind of a massive change between the 96% pre-seed funding coming from the UK and the 85% growth coming from abroad. With OpenAI, recently raising OpenAI recently raising 100 billion. And you mentioned law. Is our scale too small? Does the government need to step in with they've got sovereign AI now, but does the government need to increase Innovate UK, increase EIS, SEIS allowances? Is there more that can be done on sort of a state level?
I think less so at a state. I think the state is already doing as much as it can, and it needs to, the BBB and others will be taking more sort of larger checks at later stages, which I think is good, but they're not leading. They'll quite often just be sort of putting in a check alongside. And, SovAI is Ineffable was the largest UK seed round. It was, $1 billion basically. And you did have a lot of those institutions in there, but it was led by, again, three big US firms. It's a very difficult thing to change, because if you're one of these scale-up founders who is raising those rounds, do you want an institutional ticket from the UK government, or do you want Sequoia on your cap table? It's a very hard. So it needs to be UK, European private investors who have built up that track record. That's who I was rather putting that capital in. Those funds backed by UK institutions, backing the best founders and competing with the US funds at that scale. I don't think, and I could see the headlines in the FT if the government starts putting in £100 million checks in some of these, big hyperscale companies. I mean, it might be, it might be what the founders want, but when it goes, if not all these companies, not OpenAI, Anthropic, are all going to succeed in the way that everyone hopes. That's private markets, and that's fine with venture, with the risk profile. But as soon as you enter that risk profile into public money, especially big public money, that's where, you can see headlines in newspapers being quite unfriendly towards it. And I just don't think it should be the way it should be done. The government has to be, we're trying to do the right things through the institutions to get that money in, get that expertise, but it has to be private market expertise to really do scale up properly, in my view. So I think it's more of a, that's not an exact answer to your question, but it's a very difficult one to solve, but we need to at least try. At the moment, we're just letting it all drift away. So for me, it's more getting more of our private institutions and everything else, learning how to grow a tech company, how to really scale it, get that expertise in the private ecosystem here, and get the risk appetite to do it, and do it more often. And that's the solution for me.
I agree with Chris. We were actually having a discussion prior to this panel, and I think there's a very fine line for which the public or sort of like government money plays in this ecosystem. Obviously, I think there are some good initiatives for sure, but I agree. I want sort of private market expertise going into those sorts of things. The government rather should be, I think, more of like the enabler. So I think good enabler, SEIS, EIS. I think we're very, very blessed with that scheme here in the UK. I didn't actually realize, Chris, that France had copied it, so that's great. There are other countries that have not copied it so well, like Ireland, for example. So yeah, there are things we do on a good like enabling level, but yeah, I don't know how comfortable I am with governments getting too involved. I mean, like, I actually don't know the track record of the Future Fund, but I don't think the Future Fund exactly had the best return post-COVID, but that's a separate discussion.
Whole other conversation.
Yes, the gentleman here with the blue blazer.
Yep, Mike is coming. Bear with me.
You can shout, yeah.
That's almost there.
I'm on time.
Thank you. Great presentation, Chris. Great to see the UK government initiative. So you mentioned the capital gains deferral. I'm gonna be a bit controversial. I actually don't think the UK government is doing enough for our life science ecosystem currently. Right, so I represent the service sector, so we have UK-based laboratories. We support academic spin-outs, biotech, virtual companies with their early-stage drug discovery and development, very much modality and therapeutic agnostic. In the last 18 months, companies have gone under, right, in our field. 3,000 jobs have been lost in 18 months. I haven't heard any sound from the UK government how they're going to support all these scientists, skilled scientists that are currently searching for jobs. The elephant in the room for me is we are losing a lot of work to India and China, generally due to cost, essentially, and time efficiencies. The UK government introduced RDEC recently to encourage UK companies to work with UK CROs. It's not enough. It's just a 20% saving, which after tax about 15%. Prior to Brexit, we used to have arrangements with the French government, CIR, the Credit Import Research, which allowed French companies to work, or biotech to work with UK companies and receive a 30% tax rebate. Since Brexit, that's gone. There's been no commensurate platform in place. We don't do any more work with French companies. They don't even approach us. What is being done to address these issues? Because I do worry about our life science ecosystem here, in particular, the service sector. I know quite a long question, right? I'm happy to take that later on.
We can discuss it afterwards, but again, I think that falls into that, non-AI bracket where, and there have been, there was what was it called, LIFT's long-term investment for technology and science proposal a few years ago, which had a real life science, and that got sort of quietly dropped. So yeah, you're right, and I agree. And again, an area where the UK really punches above the weight, or traditionally has, is in life science and biotech. But it has been forgotten a lot in the recent conversations. So I agree with you. And a lot of the loss of that funding, which we've accessed bits of it again, but still not in the same way, has not served us very well. So yeah, so I agree with a lot of what you say, and I'm very keen to get life sciences back on the agenda. We have some fantastic VCs in that space, who are having a real hard time raising money, but are still, that's where the scale-up gap's a real big thing. But it even goes even earlier than that at the moment, I think. So yeah, so I think life sciences needs some more time in the spotlight. And yeah, no, and happy to help everything you're doing in that regard. And yeah, and I have a very good cohort of life sciences funds, in the membership who are really keen to sort of push that and get that back on the agenda again. Are we...
Right, that's all we have time for at the moment. Could you please give these gentlemen a massive round of applause? Thank you very much.
Thank you.